Hi dear traders, I'm Maria Starupa and this is the review of crypto analytics from FxCo. It's the 13th of December today, Tuesday, and now today's review we will discuss how the two important events, the CPI and the Fed meeting, will influence the crypto market. A couple of opinions on the topic that Bitcoin may win the competition with gold and the worst for Bitcoin is over. And in the end, we will have a look at the short-term technical forecast from our analytics and at the chart for the moment. Let's start. We will start with an article by Katerina Kiselova and the fundamental background. Katerina says that Bitcoin has failed to overcome the key resistance level at 17,200 and the price rolled back. However, this can still be regarded as a consolidation movement, and technically the cryptocurrency still has some headroom downward in the 15,600 area, which looks like the most likely scenario now. However, this week is quite important. There are two important events today and tomorrow. The first one is the US inflation data, and the second one is the last Federal Reserve meeting of the year, which is due tomorrow. And experts know that the inflation data, the CPI, is of particular importance because it is often the driving force behind the cryptocurrency markets. They drew attention to the fact that it is likely to show higher than expected inflation data. And as for the tomorrow's Fed's meeting, more than 80% of market participants expect the Fed to raise the interest rate by 50 basis points. However, it is still possible that it can be 75. It will depend on the this very CPI report. However, even if the Fed chooses a lower rate hike, then expect the markets will still be under pressure. And if we look at previous bear markets, the price continued to fall even when the Fed's monetary policy began to change course in the direction of easing. So these processes have a lagging effect, Katerina says. Further, she is the opinion of the Mike McGlone, Bloomberg senior commodity strategist, who believes that Bitcoin is likely to eclipse gold. McGlone says that in 2022, Bitcoin gained status of leading indicator and declined in risk-off environment, but the crypto may be transitioning toward a high beta version of gold and US Treasury. He also compares Bitcoin to Tesla shares, as analysts often group the two assets together as they use innovative technologies. So the commodity strategist previously noted that the next year could be a breakout year for cryptocurrencies after more than a year of downward trends. If you remember, yesterday we read like the opposite opinion on the point. And another opinion of Arthur Hayes, former CEO of crypto derivative platform BitMEX, who believes that the worst for Bitcoin is over. And he argues that largest, most irresponsible entities have run out of Bitcoins to sell. He says that when you look at the balance sheet of any of these heroes, There is no Bitcoin on it because they sold the Bitcoin as they were going bankrupt. They sold it during the wave before they went bankrupt. He believes that the worst for Bitcoin is over already. And now let's move on to technical picture and the article by Dean Leo and his short-term forecast. So looking at 4-hour chart, he says that overall bias for Bitcoin is bearish due to the current price crossing below the Ishimoku cloud, indicating a bearish market. Expecting price to possibly head back down towards the first support at 15,632, where the previous swing low is. In an alternative scenario, price could possibly break the first resistance at 17,297 and the second resistance line at 18,273. So his trading recommendation: entry 17,297, reason for entry, first resistance line. Take profit 18,595, reason for take profit, second resistance line. Stop loss 16,000 exactly, reason for stop loss, previous swing low. Okay, let's have a look at the chart for the moment. And today, 13th of December, and what do we see? Yesterday, from points below 70,000, Bitcoin went up, and in the middle of the day it went above $17,000, and today, 13th of December, it opened at 170,185, and now at the moment of the publication it is trading at 17,153. So it looks like it's going to the first resistance line, like the second scenario Dean said. Well, this is all for the moment, and we'll sit out tomorrow. Thank you for your attention, and I wish you profitable trading and fantastic day. See you soon.